The views, thoughts, and opinions expressed are the speaker's own and do not represent the views, thoughts, and opinions of Phi Labs or the Archway Protocol. The material and information presented here is for general information purposes only.
Hi, everyone, and welcome back to the Archin podcast. I'm your host, Valeria Salazar, joined by co-host Max McKendry.
Hey guys, happy to be back.
Yep, so this week we're starting off with two draft proposals in the Cosmos ecosystem. The first of which is the first draft proposal for ICS. So the first consumer chain draft proposal is up. Neutron is asking to be onboarded. And there was just the second Atom Zone Twitter space held by Cito and Rob Stack just last week. And so Neutron is marketing itself essentially as like the hub's execution layer. And it originally got support in 2022 July through Proposal 72, which was looking to get funded by the hub. It was funded by the hub, and now it's looking to become like the DeFi hub for the Cosmos hub and a permissionless CosmWasm execution layer.
It's really exciting to see. ICS has been in production for a long time, and they finally launched it with the Lambda upgrade. And I'm excited to see how it works out for Neutron. Their economics are interesting. So from what I read, it looks like they're going to be splitting both fees. So Neutron will essentially be paying the host chain, which is the hub, a portion of the fees they collect, which will be paid in Neutron and Atom. I think 25%, and then 25% of the MEV collected will also be allocated to the hub or the validators of the hub. And that will be paid in Neutron. They did mention also that they're planning to add native USDC as a potential fee collection mechanism that could be distributed back to the hub, but they're not intending to do that at initial launch. So that's a later down the road thing, but yeah, it'll be interesting to see if these fees are significant enough to really make it worth the validators' time and effort to actually run these binaries for these ICS chains.
Yeah, it'll be very interesting. Apparently, the MEV revenue will be coming from a new version of Tendermint that allows like for a block space auction. So it'll be interesting to see that and how that plays out in terms of incentivizing validators.
Yeah, no, that'll be very interesting. And I think Skip was working on building out essentially a Tendermint for MEV, so you could do it at the protocol level. So I imagine that is what they implemented. We also had a draft proposal from the Interchain, or response, I should say, to a draft proposal from the Interchain Foundation. So last week we kind of talked about how there was a request from Strangelove, or I guess for Strangelove, to be in charge of the repository for IBC to help align really all the different parties contributing, so that we can have a more transparent and efficient method of really merging IBC PRs and just doing really any sort of work on the IBC protocol. Their response was from, I think her name is Susanna Evans, and she's the IBC product lead. She basically mentioned that they hear the concerns. They're open to expanding who has control generally, but they don't seem to be very supportive of the prop as it's presented. So I'll be interested to see kind of where they find a middle ground here, because the Interchain Foundation did seem open to the idea.
Yeah, and you know what? I think I agree with Susanna, where I think that the custody should kind of stay within with the Interchain Foundation and under her IBC team, just because it's good to have some sort of like filter in terms of what is committed, and they've been custodying this for so long. They do have a process. They collaborate with Strangelove Ventures and a bunch of other like contributors to the IBC ecosystem. So they mentioned that they have processes in place for this. So unless someone wants to come in and propose new processes and maybe just like a different way of collaboration, I think that things have been shaken up as enough as it is with like the migration from into informal systems for different parts of like the SDK stack. So you know what, I think like unless something is proposed to enforce collaboration in a different way, things are good the way that they are.
Yeah, and I imagine they're going to find a way to settle in the middle. I do think there needs to be a bit more collaboration on the IBC side, but at the same time, I completely agree that there's efficiency in having a set team who's familiar with the architecture and familiar with the process, kind of leading that to keep this structure that they have in place. But based on the proposal and what was said in it, it seems like the community themselves does not feel like there is enough efficiency in the process. So I think both sides agree there needs to be something changed. I just don't know if they've established what exactly that is yet. So more to come.
Yeah, what I would love to see is a proposal that kind of puts forth a new way of doing things with more collaboration and maybe more teams involved so that we can speed up the efficiency, but kind of moving the ownership from the Interchain Foundation to Strangelove Ventures doesn't make a lot of sense to me because that's just, replacing one team for another and having to put in another set of parameters and things like that. So just a proposal for more collaboration would be something I'd be happy to take a look at. But moving into the Cosmos ecosystem, so Noble has come out of stealth. So for those of you who don't know, Noble is an asset issuance platform, and they've kind of been built in collaboration with Strangelove Labs. So they'll be launching their mainnet on March 27th, I believe. And so they were going to launch as one of the first consumer chains on the hub, but they've decided not to because they want to kind of see how ICS kind of unfolds. Prior to actually committing to that. But their validator set is completely made up of Cosmos Hub validators. And they've launched a proof of authority chain just to make sure that everything's trusted and secure at the beginning. And then they'll see if it makes sense for them to migrate onto like becoming a consumer chain.
And I think I like the approach they're taking with this. I don't know if it makes perfect sense to launch something as significant as like native USDC onto a consumer chain when it's really not tested at this point, as we kind of spoke about. But what I do find interesting is that they did choose to go with a proof of authority model. So for people who are unfamiliar, that basically means you typically will choose a small subset of people or nodes to be authorities on the chain, and essentially they act as the validators. So the what's really makes it different though is that in a proof of stake model, you'll normally put up stake, and you'll be slashed that stake if you act maliciously. So you have incentive to act in good faith because you do not want your delegations to you or your own tokens to be slashed. There's a monetary penalty for wrongdoing. However, with proof of authority, it's your reputation at risk. So it's a little bit of an odd conundrum because you don't have any stake in the actual protocol not to act maliciously, but you do have your reputation. And so for the people who are appointed, like I assume like Jack Zemplin, they're not going to want to have their reputation ruined. So they're probably going to act in good faith. But again, you're kind of trusting the human side of things a bit more without tying monetary incentive to it. And to me, that's where you can sometimes run into issues. And I'm not saying anyone on these authorities will. I'm just saying that's a general concern with a POA type structure.
Yeah, absolutely. I agree. And then their tokens, so the tokens that will be distributed upon their airdrop will be redeemable on Stargaze for either NFTs or friendship bracelets. So they won't be, obviously proof of authority, they won't be stakeable just yet. So we'll see how they end up handling the ownership of their chain later on.
Yeah. And I just kind of have to laugh just because I read that at first, and it's an interesting idea and it's a cool way to build a community, right? But I just kind of like think to all these other chains, like right now Arbitrum is doing their airdrop and there's so much hype around it and there's so much discussion and people are so passionate. And unfortunately, this is one of the bigger things going on in the Cosmos, and this is kind of the reward we're giving out as friendship bracelets. So I respect it. I think it is a cool gesture, but I just have to laugh a little bit. But hey, that's kind of the Cosmos ethos, right? We're supposed to be one for all. We're supposed to be working together. So it really does make sense. And then up next, we have the Lambda upgrade, which was successfully passed on the 15th. So we now have ICS and replicated security live on the hub. So this is kind of what we spoke to before, opening up opportunities for different chains to launch as a consumer chain, starting out with Neutron. And then shortly here, we should be seeing Noble get added to that.
And so right now we have that proposal coming up for the audit for the replicated security on the chain, on the hub. So that'll be passing on the 29th. It looks like it's as good as passed. So, hopefully that audit will happen within the next 3 weeks. And then we can finally get that proposal from Neutron onto an actual proposal, moved from draft to proposal, and have Neutron onboarded onto the hub. And then from there, sticking to the Cosmos landscape, up next we have the Atom Accelerator DAO. So the Atom Accelerator DAO has just opened up its application process. For those of you who don't remember, it will focus on building public goods for the Cosmos ecosystem,
which we definitely need. This is something that's been kind of an ongoing issue. Is we have all these public goods, but they need to be maintained, and who's going to do that? But more importantly, who's going to fund the people to do that has been a big pain point. So the Accelerator DAO will definitely be a step in the right direction in solving that issue. It'll allow basically different people to contribute, or really the protocol in general to contribute to helping maintain these public infrastructure goods. But my question would still be, how is this going to be sustainable in the long term? Again, it seems like we're funding public goods with grants or cash injections or potentially even inflation, which is just dilution to the holders. So although I do believe there is, a certain amount of inflation you could direct towards, overhead of a chain, especially public goods, I still would like to know what their long-term strategy is to either monetize the use of these in a way that it can at least be cost neutral, or to incentivize people to want to contribute to these, long term without having to really pay them, because again, there's no revenue being generated from the use of these tools.
Yeah, definitely. And, I think we're seeing that right now with ICS. It's replicated security. It's a way to kind of generate income for the hub and to generate revenue on that front. And then we have a bunch of other initiatives that are, people are brainstorming on how to bring economic value to the Atom token. And I think that part of the proposals that the Atom Accelerator will be focusing on funding are those that attribute more value to Atom in kind of creating a symbiotic relationship. But I agree. I think that, it's a fine line between, giving out grants and supporting the ecosystem and actually diluting the token. The grants will be anywhere from $10K dollars to $1 million worth of tokens. So yeah, we'll have to see how they manage that and to make sure that, Atom doesn't lose value with regards to the proposals.
Right. No, yeah, they'll have to be quite selective with how they're basically distributing that out. But at the same time, I do think it's necessary to have some way of providing that funding. So at the end of the day, very happy that it passed and that there is an Atom Accelerator to help really build that value that people have been wanting to see on the hub for a long time. Speaking of the hub, they recently came out with their new governance Twitter account. So this is going to be an official Twitter account that will basically be managed and will be communicating different governance proposals and participating, or be a place to participate in discussion about the proposals. So yeah, this is a really cool thing. I love to see it. I spend a ton of time on Twitter. And so yeah, it's the medium I most prefer to read about what's going on.
Yeah, I'm really excited about this, for one, just because it'll be all the proposals that you need to pay attention to in one place, as opposed to going to different forums and kind of surfing through comments and stuff like that. I think it'll make it really easy to kind of consolidate all the information that you need with regards to proposal discussions in just one place. So yeah, I'm excited to see that.
Yeah, I mean, it's really wild to see how much discussion is normally kind of done on the forums and never really makes it out to the general public or general users. I spent a lot of time in this space early on where I wasn't quite as involved, where I was, participating in the forum discussions on proposals. So the first time I'd really see the proposals are when they're being put up for vote. And at that point, a lot of discussions already been had. So I think for a lot of casual users, or even people who just prefer to use Twitter as their main medium, for communicating with crypto, which it seems like the most used platform for discussion on crypto, they now have a place to go and actually get this information and participate in these discussions. So it really just opens up the scope of who has a say now and who has a voice in some of these larger decisions being made by the hub. So yeah, I'm absolutely, happy to see that they're doing something like this. And I think more chains should consider having similar type approaches where, you can have these conversations on more than one medium so that you're reaching more than one audience.
Yeah, I couldn't agree more. I think it'll lower barriers to entry with regards to proposal discussions and all that.
For sure.
But now taking a look outside the cosmos. So Immutable and Polygon have just announced a strategic alliance to foster Web3 gaming. So they are developing the Immutable ZKV EVM, which is an EVM compatible ZK rollup that will be powered by Polygon's ZK EVM technology.
Yeah, it's cool innovation. I've seen a lot of discussion about it, and the use for gaming I think makes a lot of sense. It's going to be interesting to see exactly how they're going to use it, but it adds a little bit of kind of account abstraction aspects to it. Allows you to potentially verify things without giving up certain information. So definitely see the upside to it. However, most of the time the ZKs are used for scaling, trying to scale throughput and also trying to keep fees low. But that's really what Polygon's known for. They're obviously an Ethereum sidechain, but they're known for having very low gas and really high throughput. So it's interesting that they're the one who's actually adopting this kind of ZK EVM rollup. But again, if they're trying to focus on a specific use case like gaming, I think it makes a lot of sense. So and given the power of the word ZK right now in the market, I think it'll do well. And then next up outside the cosmos, we want to talk about some things going on with the banks. Recently, Signature Bank was bought for almost $40 billion by Flagstar Bank, which is a subsidiary of the New York Community Bank Corp. And so they took control of all the bank's deposits and really their entire portfolio. But the Signet network, which is basically their on and off ramp rails for crypto, is staying under the FDIC's receivership. So they're starting to get some of these things sorted out, but still in the early stages.
Yeah. I mean, this is quite concerning just because, they're really eliminating a lot of like that. What the bank is known for is, it's service to the crypto industry, and just continuing to hold that under receivership feels like a low blow on the side of the Fed. But moving on to Credit Suisse. So UBS bought Credit Suisse over the weekend for a fraction of that $40 billion, so for $3 billion, which is literally less than 60% of their closing value on Friday. So last Friday, when right before it was bought. So basically, Credit Suisse shareholders were essentially wiped out. They were being given 76 cents for worth of UBS stock for every 1.86 worth of stock from Credit Suisse at the closing time on Friday. And then account holders that owned Tier 1 bonds will just lose them entirely, which is really sad because Credit Suisse is one of the most well-respected banks in the industry, just regular in the banking industry. So it's really sad to see these movements happening just from one day to the next, and a lot of people losing a lot of their wealth and value.
Yeah, no, it's brutal, and to see how little they're able to recover in the buyout is kind of concerning. There must be something they see that we don't, it appears, but either way, they were able to agree on this $3 billion number. But what I find interesting is that I'd read prior that they were close to closing a deal around $1 billion, which would have been tragically low valuation. But Justin Sun, actually, the Tron, essentially the founder of Tron, the crypto company, put in a $1.5 billion bid and actually forced, well, I can't say for sure, but I like to think forced a higher bid to come out from UBS. So they basically renegotiated to a $3 billion deal. And that's where they settled at. And that happened, I think, hours after Justin Sun made his bid. So it seemed like they saw that the crypto industry was potentially going to try to participate. And they tried to close that quickly, which is kind of leading a lot of people to start conspiracy theories. More than one. One would be that, Justin Sun raised the price to $3 billion, but more importantly, a lot of people are saying that the Fed, or really the SEC, is targeting crypto banks specifically. And from my vantage point, I can't say that that's wrong. It seems like they very much specifically targeted banks that were very involved in the crypto space. We're holding a lot of funds from crypto companies, and we're basically working with a lot of the venture funds who've participated in the deals we've seen over the last couple of years. So it certainly does feel like there was a pointed effort to go for certain banks. But again, these are just theories that we're coming up with based on what we're seeing.
Yeah, I think like the crazy part is that the banks that collapsed over the last couple of weeks weren't really doing anything that was too bad. It's standard practice for banks almost. They were lending long while borrowing short to the Fed. And I think just like movements in the economy, it's just like the recent rate cuts and hikes over the last few years kind of precipitated a bank run. And it just happened to take place in banks that serviced crypto. And then the Fed just came in and really took advantage of that, right? And they really just caught them where they could, and they've kind of tried to take control and take advantage of the situation.
Yeah, I mean, it's interesting because you're right. They took actually a really conservative approach to how they were dealing with their basically deposits to earn. They were taking out, longer term, basically treasury notes to try to build up, government backed income. But the problem is that the rates have moved so much that now you are basically having to sell these at a discount to get the liquidity. So what went from a very, very safe investment by the bank, due to the bank runs, forced them to liquidate some of these securities at a discount because they had to get liquidity to give to their depositors who were trying to leave. So the bank runs just exacerbated the problem. And it wasn't even a problem of not having the liquidity. It was the fact that they had it locked up in safe investments. And due to just how the market's rates have changed over the last year or so, it's causing banks to really be in a tough position where if they didn't hedge appropriately, they're taking mark to market write downs, and they're taking huge losses and now putting them in positions where they're not able to continue on. So it's a really, really rough position to be in for the banks, but really just as anyone who's in this space as well, whether you be a founder, whether you be a venture fund, or just someone who's trying to participate, because the whole industry is taking a hit.
Yeah, absolutely. And not just the Web3 industry, but just the Web2 banking industry as well. You're starting to see cracks in strategies and, even cracks in the way that the Fed is handling all of this. So, yeah, it bodes for some interesting times within the financial markets, both in Web2 and Web3. So, yeah.
Yeah, no, I absolutely agree. We're going to look back on these times, hopefully down the road, and learn a few things, and hopefully improve for the future. But yeah, I know the Fed's trying to do the best they can, but right now it's just looking a bit bleak.
Yeah, definitely. And on that note, that's it for this week. So thank you so much for listening, Max. Thanks so much for joining, and we'll see you guys next week.
Yep. See you guys next week.
Bye.